All right, my beautiful people, happy Sunday. This video, I go over my theory on the VIX, and this is another clip from the live stream. Again, here's the main channel. Just click here, and then any of my latest videos, except for this diss track, you could find the link in the description for the new channel. But I wanted to give a little bit of clarification on this whole issue, simply because I thought it would be important. I was watching the live stream and I didn't really accurately give the main point. I think, or it was kind of towards the end. But my theory of volatility is kind of, I've been experimenting with Robinhood and just seeing the proliferation of trading and options, with the VIX representing a put to call ratio, as I talk about in the video. I think the fact that I said either outdated, but more so, I think that new times with the VIX and how things are operating is that pretty much people could pile into puts, and there's so many more retail traders and now the big funds and, just the derivative market. I'm sure some of you, if you guys are interested in derivatives, like Deutsche Bank, they have over $1 trillion, like it's or 21 trillion or something just literally crazy of derivative contracts, how that works and, the rights and whatnot. But that's kind of the theory. I wanted to just elaborate that real quick. So hopefully you guys enjoy it, and I will see you on stream. We are going to stream tomorrow. I'm thinking around 10, but I will, if I've not, I'll keep you guys updated either through my Instagram, which is also in the description link, or even on the YouTube stories. But, we're going to have some fun for President's Day. I will have a stream no matter what, though. So love you guys. Enjoy this video. Glitch in real. Yeah, that was a serious headline. No, that's a serious headline. Totally serious headline, bro. It could be, but now think of, man. So FINRA, no. Listen to FINRA. You honestly say it's fake news, but the amount of times they've referenced a glitch in data or the market or numbers, think about that article, the Federal Reserve post you made, that they were saying when 1987, when the system dynamic, I only read the abstract, but when the system dynamics are fucking around, it has a different, it affects other market processes and other stuff. That I don't know. What if that's the case? What if the government shutdown delay mixed with that volatility in it, what if that just fucks shit up? I don't know. I'm getting tinfoil here. But there's that. Oh, you guys want to hear my theory? I didn't share it with you guys yesterday. I did not tell you guys my new theory on volatility and why why options are where they are now with the pricing, what happened in October, and like my new theory on volatility. I don't know. I said it's kind of a little thing I figured out. Here's the issue. It's fucked up. It's fucked up. I think I could show it to you guys now. This has been a good stream so far. You guys have been active. I'm just going to check the likes real quick. I need to check the viewer to like ratio. You guys ran it up. Fuck yeah. Yes. Well, we made 2 Robinhood trades today. We did the Starbucks, and I post the Robinhood trades. If you go in the description, here's the main channel. It's going to take you here, but after hours, I'm posting them and explaining the trades. But today I did the Starbucks. So this was actually, I already closed. I did a day trade. I didn't want to. So maybe that'd be a good recap before I get into my volatility theory. But we did the Marches. I got these for 15 cents, right around 9.33, and we sold it for 30 cents. That was a good play. And then I'm holding a Alibaba put, which I'm like break even on now, but I'll post that play after I close it. So yeah, this is Robinhood live trading. And then we have the other accounts. This is an E-Trade account with YOLO option plays that we're messing around with, which is a stupid idea. Here's the selling premium on the Tastyworks, and then my Thinkorswim for Chart. Market could go up. China's coming down. Yeah, $250,000 on my car. Yeah, just had a little glitch last night. Yeah, right. But what was I gonna say? Oh, the volatility theory. So honestly, I think it's a new. People keep saying that the VIX is broken, or it's like again. This is my theory. We were looking at the S&P 500, and here's the UVXY, right, or the VIX, and people were getting confused that some days like the market would go up, the VIX was just holding, but then like there was times where the market was going up and the VIX was going up, literally kind of around here, and it was tripping people out. And the question is why, and even how we're seeing these volatility events occur. When we saw what we saw in October. and it coming in here today, like if we're looking for, October in 2018 in February, when those just the volatility comes out of nowhere and the markets start dumping, the question is why and how. And I think it's just the nature now of markets and bubbles. Like you guys are seeing with options and like Bitcoin, people are rushing in this stuff and pulling out of it. Like even Robinhood makes it so easy. I honestly just think the system's kind of getting outdated, believe it or not. I know that's crazy to say, but that's why I reminded me, because again, with so many more people having access to retail accounts and people just responding quicker, I think the VIX right here, the UVXY, the VIX, the VIX is literally a put to call ratio. So if there is more puts than calls, this goes up. And that's what happens. Why does it keep going down when you guys are looking? Why has the VIX just been getting plummeted? Because every expiration, their options are expiring. Puts expire, and then people are loading up on the call. So that's why you see it just constantly die. But then it has these crazy run-ups. And again, it's designed to do this as well too. I have a question. Is everybody hanging with me right now? Am I getting did I just go way too crazy and deep? Before I continue, you let me know if I because that's it. I don't know if I just drop some am I dropping too much bombs on you right now? I'll wait on you guys for a second. Yeah, kind of. Hanging. I'm with you. I'm good. This is good info. I know it's really good info. I think I want to hear your guys' take on it. Honestly, that's where this is how we source information. You guys should be here to criticize it, and we should be able to talk and go back and forth on it and figure out. It's okay. Even if you aren't Dylan, you should, if you don't understand it, you should write down questions. Write down the things you don't know. Write them on a notepad and Investopedia it afterwards, or when I'm done explaining, you could ask me. I'm following. All right, good. Then we could keep going. So again, the main point is like, so now you guys could learn how to play the UVXY, but you have to be careful. One, that's why I said before I say anything else on the UVXY, it is designed to go down. Okay, these are companies. You're buying these. This is a volatility product. Do you guys understand? They refer to these the VIX, the UVXY, anything, literally UGAS, DGAS. They're all products. You're literally buying into a product, and it's a product it's an investment product that is going to do a specific function. But if you read the filings and how they're set up, they're designed to do this. This nature and mechanism is there, and it's designed to represent something. So again, at a simple but complex level, you could see when there is puts, put to call ratio. So more puts than calls, it goes up. That's more fear. That's why the VIX is literally a fear or volatility indicator. So it goes up, then it comes down. But why is it coming down? Think about that. Either people are selling their puts and buying more calls. Think about it. As the market starts to bottom, people could still be holding a lot of puts, but they could start buying the dip like madmen. But then expiration. So now how does that? It starts to rebalance. And this is what I'm saying. The balancing and rebalancing of these assets, you have to understand how it works. So it continues to come down because puts are expiring, and now the ratio of calls is staying above it. But this is what I'm saying is kind of the problem, is that's why you're getting this influx, is that the markets nowadays, and I think it's a broken system, or it's causing it's good, but it's showing cracks. I think it's like a bridge that is structurally, it's not proper, but it could still last, just like a lot of the infrastructure in the US. But the key here is what happens during this volatility event. Why does it do this? And why are we getting, because again, here's what the question this is going to answer. Why are option contract premiums just dissipating? When you guys are buying in it and why are you not making as much? But then this is the opportunity, because if this is a forced effect, it's going to make options cheaper. But then also too, the odds of I don't even know what I'm concluding here at, but the way that I'm saying the influx, just like Bitcoin, if the people's opinion change enough and people like it, it's so much easier. And I just think it's outdated and broken. I guess that's my conclusion. So I don't know. What do you guys think? Is there an audit for for overall derivatives matching shares outstanding? No way. There's no way it could be done. And even if they did, there would still be shit off the books. Because again, it's a balancing. It's just crazy, fucked up, evil math. It's the best way to put it. I know fuck yeah, it's Inception, baby. That's a funny one, but hey, be easy. Watch, I wait. Remember that name, Antonio Sergio. Oh fuck, how am I gonna forget that? Antonio Sergio Santaro Gaspa. Well, welcome, my friend. Okay, but you remember that name. He's gonna come here in like 2 weeks and be like, it all makes sense. It's all clicking now, Josh. I watched you to this. Take your time. You should feel fucking confused as hell. And that's why, if you feel like it's an Inception, you wouldn't try to... Whoa, what the fuck was that? Ooh. Yeah, I don't know. That was crazy. Hold on. You guys hear that? Fuck, Amazon news? There's no Amazon news. What is it? VIX is a measurement. Is out. I think maybe outdated or it's broken. This is why, or I don't even have to make a claim to a flaw in the, actually, no, I don't even want to claim a flaw, honestly, because if I claim a flaw, I think that's psychotic to a degree. I just think what I just explained is my hypotheses explaining some of these recent volatility moves, these spikes in volatility and the resulting premium crush despite what happens in the market. I think it's the best way. Others are made to confuse as many people as they could take out their money. No. Well, actually, it's used by the rich. You have to, the VIX, the UVXY, the VIX, even the VIX in general, it's traded by the algos. Because if you're buying millions of shares, imagine you're high-frequency trading, buying millions of shares a second. What you do is if you're going super long on a position, you could automatically short the VIX or buy the VIX as a hedge with 10% of the amount. So that's why they do it. It's an automatic buy program. And then there's like, CTAs. It literally executes to find the balance. They go long, buy VIX. They go short, you short the VIX, and that's what happens too, because sometimes if they start shorting the VIX, that is what creates the problem. And I'm just saying that it's so complex, dude. And I'm a guy, I'm stupid. I keep things stupid. I say, I may be explaining all this. You're like, it's not stupid, it's complex. But honestly, I don't like. I understand how it works, but I keep my trading so much simpler than this bullshit. You know what I'm saying? But I've learned to, why. It's because I was just like you guys. I was like, why can't I trade this? Why is it a bad idea? And then once I fucking researched enough, I'm like, oh shit, okay. You have to keep it simple and use it simple to a degree too. Again, just focus on your financial and risk management will take you a long way.